Have you noticed a shift in attitudes towards economic uncertainty lately? In today's video, we dive into the changing dynamics of late-cycle environments. We'll explore why some predictions didn't pan out and why optimism might still be on the horizon. Stay tuned for a deep dive into the late-cycle landscape. In such an environment, investors often find themselves at the mercy of price movements, and this can lead to rapid shifts in sentiment and opinions. What has transpired in the past 2 months is a reemergence of volatility and turbulence in the stock market. It seems that the initial optimism may have been somewhat premature, prompting investors to reconsider their positions. The key takeaway here is that while the discussion may have evolved over the past month, the core concern remains centered on the issue of pricing and the challenges posed by a late-cycle environment. Investors are grappling with the ebb and flow of market dynamics, trying to decipher whether recent developments are indicative of a more significant trend or simply short-term fluctuations. In such an environment, it's crucial for investors to stay vigilant and discerning, as price action can often be a fickle and unpredictable guide. The speaker began by noting that overall averages were down by 4 or 5%, which, in their view, wasn't a significant concern. However, they expressed concern about some consumer stocks, particularly those in the lower and middle-end consumer market, which were facing challenges. They pointed out that this could be attributed to the fact that these consumers were starting to dip into their excess savings. Additionally, they mentioned the student loan moratorium as a wild card that could pose a risk in the fourth quarter, questioning whether the consumer would continue to surprise on the upside. Shifting the focus to Tesla, the speaker emphasized how Tesla had revolutionized the electric vehicle (EV) industry, making electric cars incredibly appealing to a broad audience. They acknowledged that almost everyone wanted to own an electric vehicle or, at the very least, experience driving one. While Tesla's growth had been remarkable, there were concerns about whether it could sustain this growth and remain a leader in the face of increasing competition. The video aimed to explore whether Tesla could continue to grow and the key factors that would contribute to its growth. It highlighted several initiatives by Tesla, such as expansion plans, new models, production capabilities, and innovative battery technology. Despite the challenges and doubts, the speaker suggested that Tesla had a lot going for it in its quest to electrify the future. As for Tesla's stock, the speaker hinted at the possibility of it continuing to increase over the next few months, especially after overcoming some challenging fiscal months. They teased that the video would delve deeper into the reasons behind this optimistic outlook. Now let's switch to the discussion about Tesla's stock price. The video checked in on some of the day's trending stocks, starting with Tesla. It mentioned that Tesla's shares were experiencing a decline following Deutsche Bank's decision to lower its price target from $300 to $285. Analyst Emmanuel Rosner was highlighted as one of the closely watched analysts covering Tesla. Rosner's concern was that Tesla might fall short of third-quarter delivery and production expectations. He also expressed a larger concern about Tesla's performance in 2024, both in terms of growth and earnings. Rosner's base case for Tesla was noted as an expected guidance of around 2.1 million deliveries in the following year, which contrasted with the consensus estimate of 2.3 million. This divergence in forecasts added an element of intrigue to the discussion about Tesla's stock and its future performance. The video provided viewers with a glimpse of the latest news and opinions surrounding Tesla's stock, setting the stage for a deeper analysis of the factors driving Tesla's growth and stock price in the coming months. What the speaker highlights here is indeed intriguing. The note essentially summarizes the insights from the recent Deutsche Bank Investor Day, where it was suggested that Tesla might not be planning to expand production in its Austin and Berlin factories. This has led to speculations that Tesla's 2024 delivery forecasts might fall short of the market's expectations. However, there's a silver lining to this situation. The speaker suggests that if Tesla opts not to aggressively pursue volume expansion, it could potentially alleviate pricing pressure. In light of this, they maintain their buy recommendation for Tesla. They also speculate that this might lead to an improvement in Tesla's automotive gross margins, which is something many investors are closely monitoring. Now, if you've ever contemplated investing in electric vehicles, particularly Tesla, you'd want to pay attention to what Ross Gerber, a renowned stock price wizard and Tesla stock price analyst, has to say. He believes that investing in electric vehicles, with a particular focus on Tesla, could be one of the most pivotal investment opportunities of the next decade. With the world rapidly shifting towards electric cars and embracing clean energy, Tesla remains at the forefront of this revolution. Switching gears a bit, there's been a lot of buzz surrounding potential delays in Tesla's expansion into Mexico. While some may dismiss this as inconsequential, it could have medium-term implications for Tesla's growth. Expanding into new markets has been a crucial part of Tesla's strategy, and Mexico is no exception. Any setbacks in this regard could potentially slow down Tesla's plans and its presence in a promising market. However, the speaker advises long-term investors not to be overly concerned. The key is to stay focused on the bigger picture. The global trend towards electric vehicles is undeniable, and Tesla's leadership position remains unchallenged. So, while delays in Mexico might be a hiccup, they shouldn't deter committed long-term investors. Remember, investing in Tesla is not just about today, it's about positioning for the future. The electric vehicle landscape is evolving, and staying informed is key to making informed investment decisions. If one is keen on staying informed about Tesla's latest developments and growth strategy, hitting that notification bell could be a wise move. The electric vehicle, EV pioneer, is gearing up to launch a game-changing compact model, aptly referred to as the Model 2. This move is set to democratize the EV market, making Tesla's cutting-edge technology accessible to a broader audience. During Tesla's recent Investor Day, CEO Elon Musk unveiled an ambitious plan to reduce manufacturing costs by half. This cost reduction will be achieved through a combination of updated manufacturing processes and the introduction of a next-generation vehicle platform at the Gigafactory in Mexico. The scale of production expected at this facility could pave the way for sub-$30,000 Teslas, comparable in price to traditional gas-powered cars like the Toyota Corolla. This shift toward affordability has the potential to ignite mainstream adoption of EVs, effectively opening the doors of the EV world to a much larger audience. Elon Musk's right hand, Tesla's Vice President of Vehicle Engineering, El Marav, highlighted the significance of this endeavor. He emphasized how increased production volumes directly translate into lower manufacturing costs, underscoring the pivotal role that manufacturing efficiency and next-gen EV platforms play in Tesla's long-term production targets. But Tesla isn't merely sitting idle when it comes to production. The company currently boasts 2 factories capable of churning out over 500,000 vehicles annually, a remarkable feat in itself. Yet it's not just about the cars. Tesla's battery cell production is equally impressive. This production prowess is what keeps Tesla at the forefront of the EV game. Batteries are the beating heart of EVs, and Tesla is poised to revolutionize this aspect with its 4680 cells. These high-energy density cells are central to creating longer-range EVs, extending beyond the compact Model 2. In essence, it's not just about what's under the hood, it's about the endless possibilities these cells unlock, from environmental benefits to government incentives. Speaking of benefits, the current landscape favors EVs more than ever. With increasing interest in electric vehicles and volatile oil prices, the shift toward EVs is palpable. As oil prices continue to fluctuate, there's a strong likelihood they'll keep rising in the coming years. This, coupled with the environmental and economic advantages of going electric, paints an exciting future for the EV industry. Thank you for tuning in to this insightful discussion on Tesla's growth and the exciting future of electric vehicles. If you found this video informative, please give it a thumbs up, share it with your friends, and don't forget to subscribe for more updates on Tesla and the evolving world of EVs. Stay informed, and let's drive into the future together.